Hello, and a massive hello to everybody. Hope everybody's having a great 19th of March 2017. No trade calls, no recommendations. Every response for their own stuff. We're here for educational purpose only. So again, hope everybody's having a great week and hope everybody had a great week and is ready for a new week in the markets. Fairly subdued in terms of, the data counter. We do have the RBNZ, but, much lighter than last week. Now, we'll have to see what happens here. We'll have to see if we get a little bit of a follow through after the close on Friday, into that quadruple witching. We got a bit of a selling into the close. Usually you tend to get a little bit of follow through, so we'll have to see what happens. Nothing major to add, right? So, our latest positioning was short equities, long gold, long bonds, short dollar. So, we can't complain there. And we discussed the reasoning for most of those in the past updates, so you can go back on those. So it'll try and be a little bit quicker here. So, equities. S&P, NASDAQ, and Dow. What's happening here? Our take is still that we're putting in some kind of a complex top. We would not be surprised to see the market test those highs again. What we would need to see to reevaluate what we're looking at is we'd have to see a daily close above these highs. As long as those hold from a daily close perspective, we expect to see some kind of a healthy profit taking. This is clearly still an uptrend. You've got a lot of supports to the downside. 22.72, should that break, 21.90s, and then we still have this famous or infamous range, which essentially is the election day range, and we feel there's some unresolved business down here. Now, keep in mind that in terms of the shorter term action here, there's very little to say. A lot of people are trying to squint at the charts, but you can squint as hard as you want. Nothing much is going on, right? Just look at when we put in that high, we've still been stuck pretty much in that day's range into FOMC, etc. We're stuck. So as long as we don't get closes outside here, it's going to be very difficult for the market to get any kind of momo, right? So unfortunately, that is where we are. If you look at the NASDAQ, you got a little negative close on Thursday, which is holding. That could be constructive for a little bit of some downside. And in terms of the Dow, we still think we've put in, again, as we said, that top, and we're hovering here. Ultimately, we'll break down and try to correct a little bit more. In terms of the ZBs, as we said, it's the same thing. We consider these accidents waiting to happen to a certain extent. Wasn't as pronounced here, but we talked about crude, right? We said we didn't understand how you could get long into a brick wall, when positioning is really getting extreme, and that's the same thing as positioning is really getting extreme to the downside here on the bonds into the Fed, right? And we said everything's priced in. So usually, what can happen? Price can go down, price can go sideways, price can go up. The Fed can hike, they can cut, or they can do nothing. And most, the surprise is not going to be to the downside here. So what we'd likely expect is the market to come out and take out some weak players early in the week, clip these stops. But because of the positioning, then the way you play this, if you have to play it, is to try and play for some kind of correction to the upside. And we think this is the market faking out these weak players. We're coming back higher, and as long as we hold above here, we think we got 3-4% to the upside, right, coming back into this area. Let's see if that materializes. Gold, we've been very vocal about gold actually on longs from last year actually, right? And we talked about the seasonal patterns, and this is a very nice move up about 10% into those moving averages, and then failed. And then last week again, we're very vocal talking about not only seasonals, but the way things were going, the way this has been trading, that we thought that it was a very interesting buy opportunity, fairly decent risk reward here to get long, as long as we didn't break below these levels. This was your risk for this to continue to come back up in 1280s, 1300s. And again, it doesn't have to work, but clearly it's very hard to lose money on the trade here, but it's just showing you what we look at and what we're focusing on. Now, one thing in terms of crude, we haven't looked at crude for a while here in a little bit more detail, and I think the weekly is the interesting chart, right? So after we got that nice little sell-off, the question is, what's happening here on crude? You know, our base case is we wouldn't expect crude to trade much above this range or much below this range, simply because you'll get OPEC coming in, wheeling and dealing. You get a lot more production coming on board to the upside. So, you know, we'd expect it to stay fairly contained inside this area. But if we're looking at it technically, right, if there's going to be a bounce, this is a pretty darn good place for it to bounce, right, after you got this this reversal here on the positive close on the weekly. So keep an eye here, especially if you're aggressively short. I would not be surprised to see some kind of a bounce, right? Now, whether that's going to be a bounce for finally a break higher and a move to try and take out these levels, right? Or whether that's simply going to be a little bounce and it's going to get sold in these previous supports that are going to act as resistance and we're going to break down. It's too early to sell. But the way we look at the market here, whether you're looking to get structurally short or long, gun to the head, it's more of a long than a short here, okay? Some of the currencies, let's look at some of the currencies. What's going on euro? So euro, no big surprise. Again, we've talked about this a lot. We think the risk is clearly to the upside. We've been talking about this since last year, right? End of the year, looking for this to retrace various 5%, 10%, possibly even 15%, right? And this is, you know, that's the risk. We talked about the fact that everybody has to hedge this. So as the risk comes off in terms of, you know, Holland or French elections, you'll expect to see the squeeze coming in. We'll have to wait and see. We'd be cautious about chasing this to the upside. If you look at it in terms of, you know, tighter actions, say on, let's get back on a daily. Here, I think there's a lot of wheeling and dealing. And again, even though we suspect the path is higher, we wouldn't be surprised to see a little bit of a retracement here to then correct higher. But bottom line, it's still extremely choppy, right? Yen, as we've been saying, very little to say, right? We said as long as we're stuck here, there's not an awful lot to do. And you see, globally speaking, not a lot's going on, right? Unless we start to break higher and take a stab at these 116s and get some traction, right? Or unless we take these out with some gusto, then maybe we can come back to the 107s. But right here, there's just not a lot to do, right? As we said, you can squint as much as you want, but there's not that much to do right here. So you see you've got that, you're stuck here with all these moving averages, right? Basically. Capped back below here, getting sold. You've got pockets of support coming here and much to do about nothing. So whether you're talking about positioning, whether you're talking about seasonality, really in terms of the bigger perspective, we're stuck in here, right? So again, not particularly interesting, but it looks like it is a little bit heavy and we might see a little bit of an unwind here. Cable is very interesting, right? We've talked a lot about the fact that, you know, technically, you know, as much as fundamentally you'd want to stay short here, technically you have to respect the fact that it's unable to close below that 121.50, right? Because look at, you know, how the market's reacted every time there. So you clearly can't get long into a brick wall there. So here we'll have to see how this trades. And again, the risk is clearly that you get a similar action to like on the Fed, you know, sell the rumor and then buy the news on when this actual Article 50 is going to be triggered. So again, here, does it look like we're putting some kind of a bottoming pattern? Yes. Do we think ultimately there's still more downside? Yes. You can make a case for either side. I think here what will be interesting to see is do we clip stops and do we get traction to the upside? And in that case, then 128 could clearly come into play. And more interestingly, I think, is if we sell here, because you'd expect to see a little bit of selling here, is the dip going to get bought? Because if you see the dip get bought quick, then you'd expect these highs to get taken out. When the selling starts, and if the selling starts, you don't catch any, you don't see any bids coming into support, then we'd expect this to go quick. And if that goes quick, then it's very heavy to the downside. Ultimately, very little edge right here, more edge at these extremes. even if you're looking to sell this, you could argue this is still on trend. This is still heavy. It's hard because it is making all these higher lows. So it's very choppy. And not only that, but if you look at where it's making these higher lows, all this area, look at this, it's still all inside this range, right? That kind of puke day range. You see that? So you could really argue, right, to go take it one step forward, you could really argue that once we put in this range, the market has been in a wait and hold pattern until we get more clarity, we get the Article 50 triggered, or we get something more out, because essentially we haven't moved. You know, a lot of people have had a lot to say, but essentially, look at that. You notice this? That's the puke day, and we've been stuck in there since October, right? So there's just, and I think this is probably interesting highlight to what's going on across the board, is that not an awful lot is going on. Clearly there are moves, there are plenty of opportunities to lose money, there've been plenty of opportunities to make money, but globally speaking, it's just, you know, in this holding pattern, it just seems, you know, Fed's trying to sell something, market doesn't seem to be buying it the way it's reacting to the hikes. So, you know, it's a little bit tricky, but it is what it is, right? It is what it is. Kiwi, we looked at this the other day, and, you know, we've been very bearish Kiwi for a long time, but we said, you know, as we're trading down here, and if you look at this on a 1 hour, it was very nice basing. We said clearly the risk reward here is to play for a little bounce, right? The bounce could be all the way back into these moving averages, but clearly you're not going to get short into the hole here, right? Full disclosure here, flat on all these trades into all the event risk last week, but, you know, we'll have to see what the RBNC has to say. It's hard to really get very, very aggressively long this into the RBNC because you'd expect them to want to talk this down. So we'll have to see what happens. Day close that is not above here, or let me do this, not above here or not below here, means chop suey, a lot to do about nothing. Those are the levels to keep an eye out. Okay, so I hope that was interesting, guys. Thank you so much for liking. Thank you so much for sharing. Thank you for all the support. And again, we'll try and see if anything moves. If we get some interesting action this week, we'll do an update into London, a live one. So heads up on the blog or heads up on Twitter for the link. But we'll do some live action probably around 7:30, 8 London time, something like that. We'll shoot for Wednesday. Okay, have an awesome one. Take care. Bye-bye, guys.